I think we cannot forget the basics of equities, that 1 year returns in equities are extremely hard to forecast. So having said that, I think if you look at the last 10 years, not 3-5 years, but last 10 years, you will be surprised, but the Nifty CAGR is only 6%. The nominal GDP CAGR is 12 to 16%. Year on year it is slightly moving up or down. This means that our market cap to GDP has fallen to quite low levels. So I think there is a lot of value in this market, especially in the large caps. If index in a growing economy like India trails by 8% per year, the economy, you can appreciate what kind of value is there. So I think that is what is playing out. This value is not very visible to a casual observer, because the profitability in quite a few sectors is passing through a very challenging phase. But I think that phase is coming to an end, and I think over next 2 years we should see this concern getting addressed that earnings are not growing. I think we are now likely to enter a phase of very healthy earnings growth going forward.
Prashant, a year ago or a year and a half ago, if I would have given anyone a combination of low interest rates, a declining or big drop in commodity prices, and government's initiative which were targeted towards stroking the economy higher, anybody would have bargained for a stronger earnings regime. But the grain of the truth is that earning has not kicked in. Why are you confident that this time around earnings will pick up? Whether it happens in 2 quarters or 4 quarters, that's debatable. But the fact that you're confident that earnings will come back, I just want to understand that.
So I think it is quite simple. See, what has happened is, all of that you said is true, but you miss one important factor. In 2015, steel prices globally fell to 15 or 20-year lows. And steel is extremely important for India, both the economy and for the banking segment. And that sharp downturn in steel prices, and till the time the government could impose anti-dumping duties or MIP, a lot of damage had been done. And it is the sectors which get impacted. See, when steel gets impacted, it is not just steel. Banks are getting impacted. Capital spending is a serious casualty. If 8 out of 10 steel companies are on the verge of bankruptcy, then who is going to invest in a sector? And metals is one of the key drivers of private sector capital expenditure. So this sharp downturn, unexpected massive downturn in steel prices in 2015 took a toll on not just metals, but on corporate banks and also on the capex. Now if you see where are we, and this is what gives me confidence. One is NCLT, which is, I think, over next 2 quarters we should see resolutions, progress there. But apart from that, steel prices, metal prices have gone up quite substantially. So the profitability of steel companies is very healthy now. Under this NCLT, there are several media reports which are suggesting a high level of interest in buying out these assets. So I think this is what gives me confidence that the sectors which dragged down the EPS growth, they are coming back to normalcy. The other sectors have been doing well, but if 3 sectors out of 10 don't do well, or they report losses or are 80% degrowth in profits, it will impact the aggregate. I think that is now all set to change to my mind.
Now you've argued in the past that the cycle which has played out in the past 3 years is unlikely to play out in next 3 years, which is a combination of IT, pharma and consumer, and so far you're getting it right. So I first want to compliment you on your call on pharma. It may be a pain point when you went underweight on pharma, but now I see that there's a pricing pressure and FDA problem. Are you buying the fear, or are you still sticking to your thesis?
No, I think both IT and pharma are great businesses. They are very sustainable businesses. It is just that if you look at pharma, what has happened, the prices have come down, but the multiples have not corrected. If price has become half, the earnings have also become half. So the multiples are still rich. So therefore I feel that, I personally feel that the value in IT is probably better than in pharma, though both are good, great, globally competitive businesses.
Now, pharma has two problems. One, FDA inspection. That's like a manufacturing problem. That's a process which I'm sure Indian pharma companies will sort out. But they're losing pricing power in global markets because of competition and variety of factors. Do you think the price erosion, which has started a couple of quarters ago, that's here to stay?
See, I think there are some structural changes that have taken place in the US pharma market. One, the market has consolidated very sharply. So just 2 or 3 buyers account for a bulk of the US market. So the distributors in US have come together. They have consolidated. So that is one strong, one significant headwind that this industry has, and it will remain because the bargaining power is very strong with your customers. The second thing, I think what has happened in the past, due to some supply disruptions in some companies, either in India or outside India, companies were able to take significant price hikes in few molecules, and that is what supported extremely very high levels of profitability in that industry. That part is going away. So I read an interview by the new FDA commissioner.
Yes.
So he has said that FDA will give approvals on a priority basis to molecules which have less competition. So they are very focused on bringing down very high levels of prices. So I think if in this kind of an environment, wherever there is excess profits, that will go away over time.
So to go underweight on pharma was a great call, but to go overweight on metals couple of years ago, and especially Tata Steel or steel stocks, was also a brave call because you went against the crowd. You went against the crowd and you got it right. What is the way forward for metals? Because ultimately metal is a global play, and at least my understanding of China is very, very difficult. So how do you judge a commodity which is global in nature? Because you've not bought too many metal stocks in the past, and this time you bought Tata Steel very aggressively.
See, we have bought metal stocks very selectively. If you look at last, 2 decades, there have been few occasions when we have bought metals, and we have bought when the cycle was extremely weak. See, steel, in Indian companies are very competitive in steel because we have iron ore, we have coal, we have the technology, we have the markets. So it's a good sector to be investing in, and market always gives more importance to recent profits than to long-term value. So when do you get great long-term value? When a sector is passing through pain. So metals, when it passes through extreme levels of pain, it will throw up opportunities, but you have to wait for pricing to improve. If steel prices fell to 15 or 20-year lows, the pain is not just to Indian companies, it is also to every single global company. So supply will get cut, many companies will go out of business, and the prices were at a level where most companies were losing money. And if you buy a business which is sustainable, which will sustain the challenging period, when things improve you will make a lot of money, and I think that is what happened. In few cases, this change from very difficult situation to a good environment happens fast, like it happened in steel in 2 to 3 years. But it took 4 or 5 years in oil companies. If you go back and see around 7, 8, 9, 10, 11, oil companies, for some reason or the other, the subsidies were not going away, either due to government policy or due to oil prices or due to currency. So that is what is uncertain in investing, that I know this is not sustainable, this situation, but how long it takes to resolve, at times that is not in our control, and environment can change. Look at corporate banks. Why has it taken longer than what was anticipated for the problem to solve? Because the downturn in steel prices in 2015 created additional stress. But the thesis is intact, that there is value, but you had one more problem to deal with. And once you create a problem for a large country, for an industry, it takes 2-3 years to sort itself. But now I think we have come to the stage where even that is getting sorted out.
So you think the thesis with which you bought corporate banks, that thesis of economic recovery is still intact?
Very much. I don't think it will not, because India is a growing economy. Bank deposits, they continue to grow. India credit will grow fast. What is the pain point in the corporate banks? It is just one. It is the high provisioning cost, high level of NPS. Fortunately in India, by these banks, bulk of the non-performing loans are against secured assets, assets which still have value. And rupee was 45 rupees to a dollar 5 years back, today it is 65 rupees, which means the replacement cost of these assets has gone up. So I think the haircuts in many industries, in many cases, large cases, will be small and relative to what was the markets was pricing in. So I think as if I look at next 1 to 2 years, I think corporate banks in India should revert to normalized levels of profitability.
But the regime, Prashant, couple of years ago for banking in general was very different. Now you've got competition coming from NBFCs and fintech firms. If interest rates they move higher, the treasury benefits which corporate banks have enjoyed, that also could be the missing link. So for corporate banks to do a mean reversion, the environment has to be very, very benign, which may not be true.
See, higher interest rates will actually be great for banks.
Okay.
Because banks have CASA.
Yeah.
So, but the other segments what you mentioned, they have no CASA. So actually high interest rates will be the best thing. I don't wish for high interest rates because economy is still not doing well, we need capex to recover. But should it happen, I don't think it will be negative for banks. Maybe you could have a situation where treasury gains are not there, but the core profitability of banking, the pricing power of banks will come back, and interest rates will move up on lending only if there is demand for credit, which will actually be a great sign.
Another good call or another very brave call when you took the call was to go underweight on consumers, especially staples.
So that has not worked for us. Actually, it has hurt us. If you look at last 1 year, lever we thought was expensive at 40p, now it's at 60p. It is one of the best performing stocks.
Despite the Patanjali competition.
So it has not worked for us. So this call has clearly, the underweight on consumer staples has hurt us, and I think we have been in a similar situation even earlier, and if this logic is right, if rationale is right, if these high multiples will, if the growth will not be commensurate with these high multiples, despite it not having worked for 1 year, I think over the next 2, 3, 5 years it should work out. Unless of course the numbers turn out to be much better than what our understanding suggests.
So what is the best way to bet on consumer? Because the India romance is consumption. If interest rates come out, discretionary spending and non-discretionary spend, they both are likely to go higher.
So I think it is quite simple. As a country progresses, as a society progresses, certain categories become affordable by the masses and they become highly penetrated, and they will become mature categories and the growth rates will slow down. If you look at bicycles, for example, I think they have been degrowing for 3 decades.
Yes.
Motorcycles were growing much faster, and now cars are beginning to grow faster than motorcycles. Airline traffic, why should it grow faster than passenger rail? Because people are moving from rail to air. So I think you can play the Indian consumer, and which is what we have done, by buying consumer discretionary products, which as you go up the income levels, as society, country progresses, what you could not afford to buy earlier, what you can afford to buy, the less penetrated categories, I think that is what will exhibit faster growth.